Well, it's the start of tax season, and the 2018 returns are the first since the Tax Cuts and Jobs Act went into effect.
But a recent NerdWallet study says almost half of Americans do not understand how the law affects them. So for some clarity, we're joined now by David Goldweitz. He is a senior director at the CPA firm of Fisk and Company. David, thank you very much for being here.
Thank you for having me.
We understand that the IRS says so far this year the average refund is down by 8.5%. Why do you think so many people who are expecting a higher refund are getting this unpleasant surprise?
Well, it all has to do with withholding for the most part. In February of 2018, the withholding tables were changed to give taxpayers more money in their paychecks each pay period. Well, if you're going to have more money in your paycheck each pay period, at the end of the year when you get your refund, the refund in all likelihood will be less, and that's the effect that's taking place.
You mean it has to come out from somewhere else? No, say it ain't so. Okay, so was this unexpected by the IRS or by Congress? Was this bad planning, or?
It wasn't unexpected. It was a function of the government wanted the taxpayer to get some immediate gratification, and the immediate gratification was in the form of higher paychecks. But if you add the higher paycheck and the lower refund, most taxpayers, over 80%, are still having a tax reduction.
Well, are more people taking advantage of the standardized deduction because now they're not having to do so much paperwork and they're getting, what is it, $12,000 standard deduction?
If you're single.
Single, and $24,000 for a married couple.
Correct. In 2017, almost 47 million filers itemized on their tax returns. In 2018, it's only expected to be about 18 million. So it's going to be a lot easier for a lot of people to file their taxes.
Well, that's good news right there. But could there be some bad news along with that?
Well, the bad news is the reason why a lot of people are going to be taking the standard deduction is because there are a lot of normal itemized deductions in prior years that are no longer deductible.
For example?
For example, state and local taxes are limited to $10,000 now. In previous years, there was no limit. So if you live in a state where you have state income tax, city income tax, high real estate taxes, if that's $30,000, $40,000, $50,000, you're limited to $10,000. In addition, I'm sorry.
I'm sorry, go ahead.
I was going to say, in addition, unreimbursed employee expenses are no longer deductible. So when you take away certain deductions and limit other deductions, people then will use the standard deduction.
So what about us in Florida? Because that's what we really care about. But since we don't have the state income tax, does this affect us more or less?
Well, it affects us in Florida less unless your real estate taxes exceed $10,000. But it could affect Florida in different ways. It could affect Florida because we could see an influx of people moving to Florida after they do their taxes in those states where, you know, their state income tax.
Okay, David, if you haven't done your taxes, your 2018 taxes yet, I guess there's not much you can do right now, but looking ahead, what are some tips that people could listen to maybe not have the surprise next year, maybe get some money back?
Well, what I've recommended to my clients is to look at their withholding. If in 2017 you are used to living on X dollars and your income is about the same, then in 2018 or 2019, adjust your withholding to that same level. And then you'll, if you want, then you'll get that refund. Some people like getting that refund, even though the government is holding your money without giving you interest. It's their way of savings.
All right, David, thank you very much for joining us.